Hey everybody, it's Lawrence from financialthing.com. Yes, I did get the times a little confused this week. Apologies, but about twice a year this happens. I get the hours mixed up. I thought the clocks were back, have been set correctly in the US. Apparently they haven't, because it is what it is, but here we are. Anyways, that's the main thing. We're here. It is 7:30 p.m. in the UK time, 3:30 p.m. here in sunny, hot Orlando, Florida. And we have a very special guest for you tonight, Louis Schwartz, CEO of Loanpad. I would consider Louis a friend of the show. And for anybody out there that may be watching for the first time, doesn't know what Loanpad is, this is Loanpad. This is a English-based UK peer-to-peer lending company that is a very simple, easy to use investment platform where you can get two different accounts, classic and premium, currently paying 3.4% for daily access. Liquidity is not guaranteed, of course. And then premium access of 60 days, 4.6%. These rates have been rising up as the interest rates rise up, and I'm sure that's something we're going to talk to Louis about this evening, about what his views are on the interest rates and how Loanpad is dealing with those increases. Anyway, if you could do me a favor, hit that thumbs up, because it really does help with the YouTube algorithm and lets everybody out there in YouTube land know that this is going on, so we can help others out there. And quick hi to everybody in the UK and Europe and anywhere else you're watching from. We got Athens, Greece here. We got Middlesex. We got Patty in, I believe, France. So plenty of different people in London watching. Thank you for joining. I get very excited about these streams. So I just think it's a great way of discovery. We get to see the people who are really running these companies that we put our hard-earned pounds into. So let me go ahead and fire up the old Skype and get Mr. Louis in here. 1 second, just bear with me. I'll be
Hi, Lawrence. Yes.
okay. That was my little Skype dance that I was doing. Let me know that you can hear everything okay. By the way, I turned up the volume on this stream because I noticed last week it was a little bit quiet, so I bumped up the volume. Holly, the dog, is watching behind, eager to hear about Loanpad. So here he is. Without further ado, Louis, welcome. How are you today?
Hi, Lawrence. Yeah, very well, thanks. How are you? Thanks for having me on.
Yeah, absolutely. It's certainly my pleasure. And, it's been almost exactly a year. I think you were here October of 2021 was the last time you were here on the stream. So
Time flies, huh?
It does. I've gotten a little bit gray. You look at almost exactly. Actually, I would come and say you look a little bit
grayer as well.
No, I'd say you look a little bit younger than you did.
I'm clean shaven at the moment, so probably makes me look a bit younger.
Yeah, Gillette will be happy. You're adding to their shareholder profits. So once again, thank you for doing it. We've got people
It's a pleasure.
Keenly tuned in, about 45 people live right now, all different parts of Europe and the UK. And of course, if you have questions out there, by the way, put them in the chat and we'll go through them at the end. If Louis doesn't get too intimidated, because he said to me, be nice to me today, because I'm usually, a little dangerous, he called it. But I think we're pretty nice to you, Louis. So let's have a chat about Loanpad. What I do I'd say once a month on the stream is I kind of go through Loanpad's live statistics, and I'm always keeping an eye on certain things like the numbers of investors that you have, and I've noticed it's just kind of creeping up and up and up, and then we hit the COVID, kind of plateaued a little bit during the pandemic time, and then I've seen recently Again, it seems to be increasing again. What are you doing to attract these new investors? Is that organically happening, or are you doing outreaching to attract these people? Tell me about it.
Yeah, sure. It's all really word of mouth at the moment. To date, we've not really done any major marketing at all, other than a dribble here or there. And really for a couple of reasons. Firstly, we wanted to get a good track record really before we did major marketing. And obviously with this type of business, it takes quite a while it's not just about writing new loans. Obviously, it's about seeing the life cycle, the loans being repaid, and new loans coming onto the platform. So I think we've built a good track record now with about 3.5 years or so. And we are looking to do some marketing from next year. The hold up with that is we're just waiting for our software upgrade to be live. So that has taken longer than expected. But as with anything like that, it's difficult to predict how long these things will take. And we've also kept adding improvements. So that also.
Tell me about the software update. What is this? Is this going to give us new features, or?
Yes, it will eventually. I mean, initially the software is to really integrate everything that we need into our own systems. At the moment, some of our software is third-party software that's essentially connected to our software. So yes, so that's going to bring everything in-house essentially, and that would enable us to scale without any concerns about third-party software having various limitations as they do.
Okay, that's pretty exciting. I do like the UI of Loanpad, but as anything, I think there's always room for improvements to software.
Yeah, the UI itself shouldn't, as in the interface, shouldn't actually change very much, but behind the scenes, there'll be a lot of.
Okay, so there goes my theory. No UI changes, just in the back end. Nothing wrong with that. So, of course, the big question that everybody has been asking, and this is a question that's been asked for the last probably two months. These interest rates are creeping up. This level between peer-to-peer, what I consider to be the safer levels at the lower end of the return rates is starting to become less and less and less. And we had this bank increase 75 basis points up from 2.25% now. 3% Bank of England hike. Loanpad has been increasing month to month. I've noticed we've had these increases, but you've still got that it's getting a more narrow gap. What are your thoughts about that side of the equation, and how do you sell that to people, with the classic account being 3.4, now Bank of England at 3.0?
Sure. Well, obviously, we recognize that our accounts have to have some kind of margin above, let's say, FSCS protected accounts, because those are essentially more or less risk-free, whereas we are not. So clearly, there has to be some margin. And we, as I say, we have been increasing rates already over the last 6 months or most of this year. And there probably will be some, additional increases. In terms of today's interest rate increase, obviously that was quite a large increase of 0.75%, so up to 3%. But I think, the Bank of England seemed pretty dovish in their comments, saying that, essentially don't expect too much more of that. Whereas, the Federal Reserve yesterday in America were kind of saying the opposite thing, that expect quite a bit more of that. So it's difficult to know exactly where rates will go, but certainly we're monitoring that very closely and we'll continue to adjust our rates accordingly. We are starting now to have variable rates on our loans, so that would enable us to have more flexibility in amending rates on the platform. Variable rates have never really been a big issue for us because obviously all of our loans are pretty short term, 9 to 12 months typically. So if we were doing 3, 5 or 10-year lending, it would be a much more salient issue than with short-term lending. So it's one of the big benefits of short-term lending is that you're not tying yourself into a long-term rate as an investor, as a lender. Mm-hmm. So we see, probably around between 5 and 10% of the portfolio pretty much coming to maturity each month. So that provides great liquidity and enables us to increase rates. So yeah, we'll keep doing that as the market allows.
So tell me about the process of these interest rates, of what you're able to offer investors. Are you going to your people that are borrowing from you at this point and saying, obviously we have to try to remain competitive because investors are going to at some point say, is it worth the extra risk to get 0.4% versus a savings account? Do you have to go to people like Hanf at that point and say, we've got to adjust these rates to remain competitive? And how do they take to that type of request?
Yes, absolutely. We do have to negotiate our interest rates that we charge with our lending partners ultimately, who in turn negotiate rates with the underlying borrowers. So certainly we've been increasing rates to lending partners throughout the course of this year. At the start of this year, our typical rate was around 6.25%, whereas now it's north of 7% and probably going to be around 8% as of early next year. And again, a lot of that would depend on what happens to base rate, because a lot of our new loans are moving to a variable rate. So where rates go from next year is still a bit of a mystery to everyone, I think. But whatever those rates do, we'll be in a more flexible position to adjust those rates for our investors.
And can you explain to people who might not know how the variable rate system works on, would it affect the investors in any way? Is that going to be, because that's something new, isn't it, for Loanpad with the variable rate? Can you kind of explain how that works?
Yeah, so currently up to now we've just done fixed rates. So that would be, let's say, a 12-month loan, and our rate might be, say, 7% or whatever. With a variable loan, with a variable rate, that would essentially be if bank rate today is 3% and our margin is, say, 5%, so that would be 8%. If base rate goes to 4% plus our margin of 5%, then our rate would tick up to 9% essentially, or go below if rates go down.
How have the borrowers taken to that change, since you've been doing it one way for 2 or 3 years and then you change it? Has it been generally well received, or have there been any, I don't like this?
Well, I think lending partners are, fully aware of what's happening in the market, obviously, so they understand that rates are going up across the board. We have to pay our investors obviously higher rates to keep our products attractive for them, and they have to charge borrowers higher rates. It's just, across the board rates are going up, so our lending partners and the borrowers are, absolutely understanding of the situation. So there's probably less capital in the market, and that will probably continue to reduce over the next 6 months, 12 months. So, when there's less capital that's being lent out overall, then there's generally, going to be a higher rate, higher premium attached to borrowing that capital. So that's just, obviously we're a marketplace, so we are, constrained in what we can expect lenders to be paid and what we can expect borrowers to pay.
Okay, that's fair enough. Going back to this sort of gap between the savings rate and, say, Loanpad's classic lower rate, have you seen a lot of the money shifting from the classic account into the higher rate 60-day account because these rates have moved, or is it generally distributed about the same?
Well, we have a £20,000 limit on the classic account, so that kind of limits the amount that is available on instant access at any time. The vast majority of money is in the 60-day accounts, the ISA premium and the standard premium. Don't have the exact figures, but it's under 10% that's in the instant access accounts. Okay, so that enables us to regulate liquidity much better than if we had, say, 30 or 40% on instant access.
And generally, I'll sometimes pop in here with a question from somebody in the chat that kind of relates. Norman P has asked, is it possible to still withdraw money from the growth account in less than 60 days with a penalty? So I think he's talking about the premium account. Has that changed at all, or is it still, if you want to get your money out of the 60-day, you can do it? with a penalty?
Well, yes, we do often allow early access if investors ask for it. It's not currently available on the platform. It's rarely available on the platform. It's only actually available directly on the platform when we have a huge amount of extra liquidity that we weren't really expecting or accounting for, and that's typically due to a large number of repayments in a short time frame or a huge amount of new deposits. And in such a case, it makes sense to offer investors that want out easy access. But yes, we do still allow early access when investors email us very often. Again, it's not a guarantee. It depends on liquidity as well. But yeah, we do still allow that, and there's typically a fee of 0.5%.
Okay, so it is still possible should somebody need to if the liquidity exists.
Yes.
Basically. Okay, good to know. So you have always maintained, it's one of the things when I check in on the statistics, I'm always seeing this very consistent liquidity on the platform, on the classic account, saying less than 1 day, and also less than 1 day to become invested. And that has never changed. I don't think the 3 years that you and I have been talking. How have you been able to maintain that? Because I know it's such a fine balance between how much is coming in and how much is going out, but you still have been able to do that. And I think you might be one of the few platforms that has, especially through the pandemic. So how have you been able to continue doing that?
Yeah, it's probably a number of reasons together. Obviously, the fact that we only have a small amount on instant access, the fact that we have short-term loans essentially. So, as I was saying earlier, every month we expect between 5 and 10% of the portfolio to repay. Whereas on the other side, we have 60 days notice for withdrawals in most cases, other than the instant access account. And generally, the fact that we've been steadily growing also means that there's an influx of new money as well. So we thankfully have always managed to keep 100% track record in terms of withdrawal requests. So yeah, we're very focused on continuing that.
Have you seen, with this increase of money coming in from new investors, has the cash drag become more of an issue where you've got more money sitting on the sidelines, or do you have plenty of availability for borrowers who want to borrow from Loanpad?
Sure. Well, obviously, managing the balance between the lending and the investors is always part of the difficulty. We do have, as you know, I think 9 lending partners now, so we do have a very large pipeline of loans at any time. So we're rejecting quite a lot simply because of lack of liquidity. So we are very well catered for on that front. Hence, we haven't really taken on any new lending partners for a while. So yes, it's always there's no ideal percentage of cash that we would like to hold. It really depends on the situation, but typically we'd be holding anywhere between 2 and 5% of the portfolio in cash, and that gives us a comfortable cushion to ensure we can meet all withdrawals.
One thing I've always wondered, so a lot of peer-to-peer lending companies, Louis, have these very tight, stringent rules on what they're willing to loan to. And because you have sort of these existing relationships with your borrowers that I think a lot of peer-to-peer lending companies might not have, you've been working, say, with Hant for a number of years. I mean, I think it was, you said you were working with them for 12 before you started Loanpad representing them on the legal side. Are you still rejecting a lot of, loans that come through from your lending partners, or are most of them that they send you, they know your criteria, and you would be able to accept a much higher percentage of those loan requests because you already have that existing relationship? So I guess the question is, would you be denying a good amount of those loans even if you had the lender liquidity to loan to these borrowers?
There's not many loans that are passed through to us that we reject on commercial grounds. It's usually due to liquidity, although there are some that we have rejected. But our lending partners are quite well aware of what we will and won't lend on. But yeah, we have had to reject a few loans, sometimes for legal reasons. There could be some legal issues, or it could be the type of property doesn't really suit us. We were asked to lend money against a petrol station in Birmingham, which had contamination issues. So we don't lend on just anything. Obviously, our lending partners are clear that roughly what our terms are and what we will and won't lend on.
That's a pretty good position to be in. I mean, I remember one company told me they tend to accept about 5% of all the loan applications that they get sent through. So I'd imagine it makes your job a lot easier when you don't have to worry so much about being sent questionable loans.
Yeah, well, it's very heavily filtered before it comes to us, obviously, because lending partners probably are turning down, I don't know exactly what percentage, but far more than we're turning down. By the time it comes to us, it's going to be a loan that our lending partner has already essentially confirmed they're happy to do and put in their portion. So at that point, it's unlikely that we would have a reason not to go ahead, but it does happen.
Understood. And by the way, if you're enjoying this content out there, please subscribe to the channel and hit that little thumb thingy button. I think that's what they call it. Louis, so somebody in the chat put a message in today here and said, I have to ask you about it. If you can't talk about it, I understand. It said that a default loan today had come onto the platform, or
Yes.
Can you talk about that?
Yes, sure. I mean, there's not much I can say that isn't already in the loan report, but yes, that's a situation where the borrower has run into difficult personal circumstances, nothing to do with finances or this particular project. They're going through a very difficult personal issue, and that has hindered their ability to continue managing this project. So we're simply appointing receivers to monitor the completion of the works. It's a pretty small project in terms of the amount of work that's being done. It's a conversion. So there's about £125,000 worth of works to be completed. And the receiver will be monitoring that and marketing the properties for sale. Our loan on that is about 500,000. The existing value today is north of 1 million with the GDV of about 1.3. So we're not concerned in any way, but we're taking steps that we feel is in the best interests of all the parties, including the borrower. We think it's in everyone's interest to get the project completed rather than a fire sale at this point. Yeah.
Okay, well, thank you for addressing that. And will you be going in there and doing the work yourself, in the aid of keeping things on track?
I don't think so. But
well, hey, if you need a hand,
that would be a worry.
I'm pretty good with a hammer, when I'm over in London, I don't mind helping you out.
I'll pass your details to the receiver. Maybe they can get in touch.
For the good of for Loanpad loans. Talking a little bit further about distressed loans, it's something that you generally don't have to deal with too much. I mean, most of the loans on Loanpad have run well. They tend to get repaid. You got the odd blip on the radar here and there. Have you had any other situations since the last time we spoke a year ago with difficult loans?
We've been quite lucky in that sense. I mean, you do expect a certain number of loans to run into some form of difficulty. We've been quite lucky in that sense. We have had a few, but proportionately, I would say probably much lower than average, I would estimate. We had one where the borrower simply, at the end of the term, wasn't communicating, wasn't responding to anything. So we were left with no choice but to put it into the auction, sell it, and recover the loan, which we did, and that's all been done. There was another one, a very long-standing one in Oxford, where another borrower also had difficult circumstances. So a receiver was appointed to complete that project and sell the flats. That took quite a bit longer. It was a more complex project, but that's all been done, and the property is sold and the loan repaid. So those are the two main ones that spring to mind, really.
Yeah, you've been very lucky then. Well, obviously there's things that go into the fact that I think people are providing you with good quality loans and you're sort of not accepting the bad ones anyways, if there were many out there, which in result shows through with the...
Our lending partners are generally on the very competitive side of the market, very lower risk side of the market as well. So, many bridging lenders are charging much higher rates, but taking on much riskier type loans, whereas our lending partners are pretty much looking for the safest loans they can get.
So you said you've got 9 lending partners. Do you plan on... Is primarily most of the loans still going through the original, I call him the OG, Mr. Hanf, and then with a splattering of other lending partner loans in there? And are there any plans to bring on new lending partners, or is that a matter of having more money to be able to invest and lend out to these borrowers?
So I'd say Hanf is probably around 20% of the portfolio. So a significant amount, but not a majority or anything like that. So yes. In terms of new lending partners, we do have probably half a dozen that we've had discussions with that we and they would be quite happy to partner with us, but as you say, it's down to liquidity. So we're struggling to service all the loans that come our way from our existing lending partners. So it wouldn't make that much sense to take on new lending partners at this stage.
So basically, you need more lenders to come in and provide more.
Yes, as the loan book grows, then yes, we would at some point hopefully be looking to take on new lending partners. Absolutely.
Okay, so there you go. So if you are thinking about trying out Loanpad or putting some more cash in, you could sign up through the Financial Thing website. There's a link. There's a banner up at the top and back on the cashback page. You can also sign up. This is not a paid what they call them, advertorial? I don't know. It's not a paid advertisement. I just personally use Loanpad myself, in full disclosure, and I think Louis and his team are doing good things over there. And I think he's generally a nice guy. I mean, he bought me coffee, I think, last time we were together, and some falafel.
And London. Some lunch, yes.
I remember that place. That was a good spot. Moving on, anyways. Talk about Loanpad as a business. How are you guys doing financially? Are you making money now? Are you still operating in the red? Is it month to month? What's going on?
Yeah, so we've been profitable since the middle of last year. So that's still the case. And we don't see any reason that shouldn't continue to be the case. Obviously, increasing rates has a short-term effect on our margin until the loan portfolio catches up, but that's why we've been raising rates gradually so that our margin doesn't get hindered too much. And yeah, things are still fine from a profitability sense. Absolutely.
That's good. That was like the shortest answer, to the question that I think I've ever had from a peer-to-peer lending company, which is there's nothing wrong with that.
Of course, we want to be more profitable, and as the business grows, we hope we will be. But right now, it's about really growing the loan portfolio as opposed to focusing on profitability. So we're quite happy to squeeze our margin as necessary.
I'm very interested, Louis, in interest rates and how you price what you're able to offer to lenders. Is that something that you personally decide based on what's going on with the loan book? And is it quite a quick decision where you're able to say, we're going to put rates up next month or in 2 months? How do you make that decision?
So we do have, ongoing discussions, monthly pretty much with our lending partners about rates and where they're going. We also have to be mindful of the fact that even though there's no other peer-to-peer platform that does what we do, we do have competition from, mostly from challenger banks, the likes of Schwartz and Aldermore, that offer facilities to lending businesses. So we do have to be somewhat competitive in that sense. However, I do feel that our rates have always been very, very attractive to lending partners. We've always focused very much on growth and being as attractive as possible as opposed to profitability. But I do feel we do have some decent pricing power in that sense. And, if push came to shove, I do feel we could increase our rates and potentially charge arrangement fees, which we've never done to date. So,
okay,
and that could obviously transform into higher rates for lenders as necessary.
okay. Talk about what you see happening if you had a crystal ball of 2023 and what you think is going to happen with regards to Loanpad's rates. I think you have a rate increase coming next month, right? Is that right? December?
Yes, goes up to 4.8 and 3.6 next on the 1st of December, correct?
Okay.
Yes. So I expect they'll probably. I expect they probably will continue to go up January onwards. Where they will get to, I couldn't tell you at this point. It would just, be guesswork. It really depends on what happens with base rates, with market rates elsewhere.
Okay.
So, but we're obviously very, very keenly focused on what's happening there and looking to adjust our rates as quickly as possible accordingly.
Yeah, and it's always a tricky thing for you because I know the lenders and the investor side, everybody wants higher yields, right? They want to keep the risk low. That's what I always tell people too is, well, some people say, well, some of the lower base rates in peer-to-peer lending are just not attractive. And I'm like, well, if you think about equities, and we've seen a drawdown of 25, 30%, does 3.6 actually, is that actually quite attractive, or is 4.8% attractive for 60-day? I personally think 4.8% is relatively attractive for a 60-day account, considering the track record of Loanpad. You've really been great, I think, since you started operating. But you're always going to have those naysayers that want more and say, I just don't think it's worth the risk. We've seen these peer-to-peer lending companies that have gone out of business, and we have to worry about our capital disappearing. What are your thoughts on that?
We do get a lot of feedback from investors about rates, and obviously we see a lot of comments all over the place about investors' sentiment, etc. So we have to weigh it up, on all sides. The best barometer we have really is inflowing and outflowing funds. So it has slowed down a bit over the last couple of months from what it was previously, but it's still going in the right direction. It's still positive. And I think a lot of that slowdown was really not so much the rates that are being paid, although that is certainly part of it. I think it's, investors are quite understandably quite nervous with the market volatility we've seen, the political uncertainty, the mini budget that caused, shockwaves in the market. And understandably, it makes investors very nervous about what's going to happen. So it's understandable that we would see a slowdown. I think it's really testament to our product, actually, that we didn't see a drop in funds under management, just a slowdown. So hopefully it'll continue to pick up. And
people talk with their money, really, at the end of the day, don't they? If they don't like it, they leave. Yeah.
Exactly, yeah.
We have a question from Patty. I don't think this is really his name, but he goes by Patty. I can never pronounce it. Giffelin. I think he's in France. But he said, Louis, how confident are you that increased borrowers' rates will not result in increases in defaults? So you charging the borrowers more, is that going to push the default rates up?
I don't think so. On our side, certainly. Certainly in the wider market, as rates go up, it does feel that borrowers will have more difficulty in keeping up with those payments. From our perspective, considering that we only lend half the value of the security, there may be additional defaults, but I wouldn't expect those to translate into losses given default. So I do think that we're still going to be in a very, very comfortable position, even if property prices were to drop 5, 10, 20%. So defaults, borrowers may have more difficulties in certain situations for sure, but I think it's unlikely to translate into losses for our investors because of the loan to value.
It's very good having a low loan to value, if it's valued correctly in the first place. That's the You want to talk about some other companies'
helps me
valuations?
sleep easy, yeah.
Yeah, we want to sleep easy. I have to ask you, so I didn't put this into our discussion before, but what do you think about the current peer-to-peer market in general? Do you think you see positive things going on? We don't really see a lot of new players coming into the market, obviously with these FCA tightening of the screws. We've got these removal, I think, in January of the paid incentives. You know, the peer-to-peer companies are not going to be able to offer things like cashback, which I presume Loanpad will end that, correct, in January, or is that changing? Is that coming off?
No, yes, absolutely. Yeah, we have to end any bonuses as well.
When does that end? Is that January 4th?
I'm not sure the exact date. I think it's actually next month. I think it's in December at some
December.
point.
Okay, so yeah, if you want to get your bonus and sign up, you better do it now because that's going to be going away soon. So what are your general take on what you're seeing going on in the peer-to-peer sector? Has it been a positive take for you?
Well, I think, as you say, it's a lot quieter than it was, 3 or 4 years ago, with a lot of companies having exited or closed down for one reason or another. There are, I think, other very good P2P platforms around, and although we're competitors in one sense, I think really we're fighting the same cause. Essentially, we all want peer-to-peer to grow, and if Loanpad brings an investor into peer-to-peer, there's no reason that investor won't diversify into other platforms as well. So we very much support other P2P platforms. We want to see them do well. Mm-hmm. And yeah, we'll keep doing what we can do. But
am I allowed to ask you who you like and who you think is doing a good job, or is that going to be something that you're going to plead the Fifth Amendment of the U.S. Constitution?
I'll be scared not to mention certain platforms. So yeah, all of them. I think they're all doing a good job. If they're still in business, I think they're all doing a good job.
Oh, so you're saying that anybody that's in business right now that's still going?
I think the platforms that are still operating under much stricter FCA conditions, and with much stricter investor due diligence, essentially investors have been burnt many times with other platforms. So any platforms that are still running are probably operating very well. You would hope, at least. So I think that all the platforms that are running now must be doing something right. So. I hope to see them all succeed.
I like the blanket statement. That's good. That's a good blanket statement. Well, I mean, because we all want the industry to do well. So, if the other platforms succeed, and I think everybody wins, right? It's not so much the competitive side. That's what we got to see.
Yeah. We want to see other platforms do well as well.
Absolutely. Okay. A couple of other questions here. Hopefully these ones are not too dangerous for you. But if you can't answer anything on here,
sure.
Please just say so.
Do my best.
Okay. Let's see here. Mike Powell, he always has good questions. He's a very informed watcher. He said, well, what is your typical spread between borrower and lending rate? Unlike a standard peer-to-peer platform, lenders don't have any visibility on the total cost percentages to the borrower. So we don't know what the borrower is being charged versus what the lender is being paid. So you're saying
we do put the rate being charged into every loan report, so that rate is shown in there. So the
visibility is there; it's in the loan report.
Yes, the rates should certainly be shown. It's actually an FCA requirement to show what we're charging. So we do show our rates on every loan. So as I said, currently, it's probably around 7.25% on most loans, going up probably from early next year.
Okay, so read the reports. It's in there. Let's see here. Michael Shaw, I don't know where Michael Shaw is, but he said on the last stream a year ago, I guess he was watching back in October of 2021, the minimum amount to transfer would be reduced from the amount of £10 to a P, 1p. I know we had talked about that too. Is there a plan still to implement that?
Yes, that is part of our much talked about software upgrade, which is still to come to fruition, but we're inching closer, so it's not far away now. But once that software upgrade is live, then yes, there'll be no minimum investment other than a penny, essentially.
Okay, that's definitely a good thing. Invest22 in London Town says, Has Loanpad become compliant with Sharia law? I know you were trying to achieve this. Have you been able to yet?
We haven't yet. No, it's something on our list. It is something on our list. We'd like to be as open to all types of investors. So that is something we are looking into.
Okay. Let's see here. Jack Smith says, this is a comment. I invested in Loanpad because the ISA wrapper, as back rates for ISAs are much lower. So good little thumbs up there for.
Thank you.
From Jack Smith. Let's see. Another one from Mike. He is mentioned here about a large defaulted loan, about £9 million for the lender partner, and they will be taking a loss. Do you know what loan that is?
Sorry, a loan of £9 million.
Yeah, he said.
On Loanpad side? Sorry.
He said there's a massive defaulted loan, about £9 million for the lending partner. Do you know what that is?
He may be referring to a loan in Sheffield. I'm not sure it's nine. I'm not sure it's exactly 9 million. Our loan is 750,000 or a bit less actually. It's a fully completed development of around 50 something flats in Sheffield, which has got a market value of 5 million plus. So we're at about 15% loan to value. So there's no concerns on our side. Our lending partner is in control of that building and managing the rental income. Essentially, it's fully let, producing around, I think, about 300,000 per annum. So it's from our perspective, it's a very secure situation. It may be the case that our lending partner is unlikely to recover all of their loan, but from my understanding is, and I don't have the figures with me, that that would only be some rolled up interest that isn't recovered at the end of it. But majority, if not all, of the capital will be recovered.
Okay.
But lending is not always certainly if you're lending at high loan to values, there's going to be the odd loan that is going to run into difficulty. So
yeah, the good thing is you only have a 15% LTV, which is very well protected for the lender's side. So yeah,
yes.
Okay, that's a good thing. Here's one from Annabelle, who I think is in Spain. So I was going to say bonjour, but that's completely the wrong. Hola, Annabelle. I don't think you're going to be able to answer this one, but I'm going to ask you anyways. What percentage of your own wealth would you invest in peer-to-peer right now, and where else would you spread your available cash, stocks and shares, gold, property, etc.?
I guess it's relative to what my net wealth would be, but I'd certainly be happy to invest in peer-to-peer lending if it wasn't time-consuming for me personally. Some platforms might be quite time-consuming, so for me that would make it difficult. But certainly platforms such as Loanpad or other platforms that have auto-invest and auto-diversified kind of positions would probably be quite attractive. Yes, depending on the rates. Probably 5 to 10% of my net wealth if I had to.
Put a number
an
out.
Answer.
Good. I'm glad, that I didn't expect you were going to throw a number out there. I was thinking you wouldn't. By the way, not financial advice. Anybody listening out there, don't listen to myself or Louis when it comes to your percentages, because it really is based on, everything is so personal, circumstance based, depending on how much income you make, how much you got in savings, all that kind of good stuff. So, any cryptocurrency?
I don't own any cryptocurrency.
Oh, Louis.
No.
Oh, dear.
I know. I'm sorry, Lawrence. I know you're a crypto fan. I've just not got the time to learn about it and get involved.
That's
maybe
okay.
One day.
That's
maybe
okay.
One day.
Next time I come to London, I'll give you a crash course.
Please do.
Just don't buy it at the top. That's all you need to.
It's a good start, yes, for sure.
Just don't buy it at the top. Okay, let's see if there's any other interesting questions here. Oh yeah, what do you think about stocks and stuff like that at the moment? You follow that kind of investment, or are you strictly all your money's into the Loanpad business and you just don't
No, I
really mess
certainly
with it?
do follow. Yeah, I follow the financial markets. Yeah, I would certainly have some of my net wealth in stocks, and yeah, absolutely. Yeah.
Yeah, the markets are just
Yeah.
so crazy at the moment. It's
Yeah, they're volatile for sure. But if you're a long-term investor, then I think dips in the market are probably a good time to potentially add to your portfolio in a slow, controlled way.
just got to be smart. I think that's a great statement there. Long term, short term will get you in a lot of trouble for sure. But anything long term, investing wise, stocks, you're okay. Zoom out. They say when in doubt, zoom out. I like that word.
Yeah.
Okay. Let's see. How long were we going for? 50 minutes. I know you got to get home to your kids, so I'm going to ask you one more question. Then I'm going to let you go. It's been really great. Anything else you want to tell people about Loanpad and what you're going to be doing next year? Are you going to be keeping things on the same path as they've been? I always say the ones that stick on the same path to what they know seem to do well in business. So do you plan on adding anything in addition, changing things, or is it just full speed ahead as is?
We do have several ideas of new account types, but the question that I always really find myself coming back to is that going to simply encourage investors to move money from our existing products to a new product rather than encourage new investors to join? So for now, we're fully focused on what we're currently doing. Post our software update, we do have ideas for new accounts, but we're probably going to seek some market research and investor feedback on what kind of account they would find attractive, and obviously give them a few options to consider.
Okay. So there you have it. There's Louis, Loanpad. Go check it out if you want to give Loanpad a try. It's loanpad.com. Go to the Financial Thing website. Get yourself some cash back before, or a bonus before that all ends, thanks to I don't know if it was the Prime Minister that was involved in getting rid of putting some pressure on getting rid of the incentives, but who knows, right? It could have
Which
been.
Prime Minister would that have been?
Number 3, Mr. Rishi
Yeah,
Sunak.
possibly. I'm not sure what the who started that idea, but unfortunately, yeah, that will have to stop.
Yeah, go get your bonuses now, and we'll have you back on again in future. We've been talking about maybe doing a multiple person little chat between different peer-to-peer lending companies, which I know you said you would be happy to be a part of. So I always enjoy talking to you, Louis. It's you're very transparent, and I appreciate that about you. So thank you again.
Thank
best
you, Lawrence.
of luck.
Thank you.
Best of luck.
Thank you very much.
Okay,
bye,
we'll
everyone.
speak to you soon. Okay.
All the best. Take
All
care.
right. Take
Bye.
care. Bye. There you go. So there you have it. You listen, you're not going to get this type of content anywhere else. It's here. Right here at the Financial Thing live stream. Because basically I have to bribe Louis with coffee or chips or something to come on. No, that's not true. He's quite happy to come on. He's very giving when it comes to that. So anyway, good stream tonight. A lot of good information. I hope that satisfies your questions as to what's going on with Loanpad, what they're planning on for the future. I personally don't plan on changing investment strategies with them. I think they're doing a really great job. Yes, interest rates are going up, but I expect Loanpad will increase their rates too. Yeah, so I will see you next Thursday. That will be November the 10th. Just put it in your diary that in December, I don't know what the date is, but I'm going to be taking a bit of a holiday and will not be streaming for a couple of weeks, I think. So Christmas Eve, the 24th, and I may do a, you know what, I'm going to plan on, no, sorry, that's not, I'm looking at November. So there will be no stream on the 22nd, and no stream on the 29th. But I may do a New Year's Day stream, so because I will be over in the UK during those dates, doing some business work, visiting family. So you're gonna get a couple of weeks break from me. I may switch some dates around if I can stream, but just put it in your calendars. So anyway, I hope you enjoyed it, and I will see you next Thursday. Thanks again. Please subscribe to the channel. It helps me out a lot. It doesn't seem like much, but honestly, subscribing to the channel helps a ton. Hit the thumbs up button. I will see you next Thursday. Have a great weekend, everybody. Love you all very, very much. And I'll speak to you soon. Bye.